to what extent your community, yourself, and your area is actually already affected by climate change, to kick off this topic today, which will be on climate change and insurances. So let's start with this. Over to you.
Thank you very much for giving me the speech. So it will be complicated to talk about the consequences of climate change in Madagascar really quickly, but I'll try to do my best to sum it up. So as we all know, Madagascar is an island, and an island with a huge biodiversity and a really poor population. So of course, the effect of climate change, we don't think and talk about it as something that will happen in the future, but it's already the main topic for our population. The Malagasy youth is really concerned already about it because we feel it. 80% of the population lives in rural areas, you know. So that means that they rely way more on natural resources, which is really touched by the climate change. So for instance, we can notice the increased temperatures. The rising temperatures lead, you know, to hot waves. So that affects directly the agriculture. And as I told you, 80% of the population are farmers. So they are directly concerned by this agriculture effect. The water availability, which is also a big concern for the farmers. And as an island, we are also witnessing way more extreme weather events, which are deadly every year. And I say it like every year, we face more frequent and stronger cyclones, floods, drought, which leads to hundreds and thousands of deaths every year. Mostly, you know, the most vulnerable people. So for me, I have the chance, you know, to travel a lot abroad and to visit a lot of countries, but I can easily say that Madagascar is one of the most affected countries by the climate change. As we are also an island, we face the sea level rise in all our coastal areas. And I'd say that the last main consequences is our biodiversity loss. 80% also of our biodiversity is endemic. That means all the tree species, the animals that you'll find in Madagascar, you will never find them anywhere else in the world. And we are witnessing every day the disparition of many endangered species. And we rely also on tourism, you know, so people come to our island from everywhere in the world, from Japan, from Germany, from the US, to visit our biodiversity. And the day we won't have this biodiversity anymore, we won't be able, you know, to attract tourists anymore. So yeah, I tried to sum it up really quickly, but we can talk about it deeper. And if there is one point I really want to share is that it's been a long time we stopped talking about climate change as something that will happen, but it's our daily reality in Madagascar.
It's already happening for sure. No,
Yes.
Thank you so much for sharing these different effects on Madagascar. And it's, I think, a worldwide phenomenon, especially like biodiversity loss. I mean, we are based in Switzerland, so we have a lot of glaciers, but they are shrinking every year, and it has massive effects also long-term now on water resources and like also many different effects on it. Even in a very, very rich country like Switzerland. So maybe let's hear from all of the audience from abroad where you're all based. What can you notice in your local communities? What type of climate effects or climate change effects you already notice, or what you're scared of? What is there, what you can share with us? And while we ask you these questions and you have time to reflect and think, like floods, heat strikes, heat strokes, heat waves like we experience right now in Europe quite a lot. What is there that you experience in your local community? And while you answering this question, I will dive into a more specific question with Max on his business. And Wilson, if you could share the screen again with the Mentimeter question, that would be awesome in the meantime. So Max, you mentioned now all these different effects you notice in Madagascar. And your business is actually in the green sphere. Your business is really tackling different effects or trying to improve what can still be adjusted, right? I mean, certain things, we still have a steering wheel to a better, improved, sustainable future. So could you kindly share with us how does your business try to mitigate the climate change effects? And also, is there any way how your business is already kind of negative impacted by climate change, even though you're working in that area? Over to you.
All right. So as I said, we are currently facing two main issues that we are trying to solve with our business. The first one is, of course, the global warming, the climate change that will affect all of us, living in this planet. And there is also a really urgent one, which is the poverty of our country, So we cannot be focused only on the climate change if we don't, work on trying to solve the urgent needs of our population. Even though these two topics are really interlinked, because the climate change makes the poverty worse, so they are really interlinked. So we tried to find a model where we could at the same time fight climate change and also try to develop our country. And for us, reforestation is one of the best solutions, to generate value, to get people out of poverty, to improve the livelihoods while fighting the climate change, which is our generational fight. So what we do is that we plant trees on farmers' land. So we make agroforestry projects. We combine different species, and 100% of the trees that we plant are useful to the population. So we don't try, to replant a primary forest with where the main goal is to protect the biodiversity. These forests are aimed to get people out of poverty. So it can be cash crops, fruit trees, energy wood, construction wood, only trees that can benefit to the people. And in the long run, it's also the best way to protect, the primary forest, the biodiversity, because you will put less pressure on the primary forest if you improve the people's living conditions. So so far we have planted around 1,400,000 trees on farmers' land and on mangrove in Madagascar. It's been 4 years we've been doing that, and it's a really young team. We are 125 full-time collaborators working only on this reforestation project. And I'd say that the mean age is maybe 32, 35, so it's a really young company. And because we really feel that the youth is way more concerned about these issues. So the benefits of our projects are, of course, when you plant trees, you sequestrate carbon. You also, as I said, protect biodiversity. You fight the soil erosion. And planting trees also, attracts the rain. So it helps the farmers to regulate the water on their land. You reduce also the flood risk and improve the water availability and the water quality. So this is mostly for the environmental impact, but for us, the main impacts are always the livelihood opportunities. As I said, we create a lot of jobs in the nurseries, in the planting, in the forest management. And what we are really proud of is that all these jobs are green jobs, It's the 21st century's jobs. It's not like, I don't blame the past generations, but these jobs we are creating are fully adapted to our time. And that's something we're really proud of. And being an engineer in Madagascar is not always the guarantee to find a job. there is many engineers, doctors who don't find a job because this is the structural state where we are actually. And we are really proud, to give job opportunities that match their aspirations and their vision for their future. And yeah, so I'd say that is the main impact we have witnessed for now. And in the long run, our goal is really, to transform the harvest we have with the farmers, how to not sell the fruits raw as a raw material, but to put some little transformation units in the villages and to generate, the value really locally and to develop rural entrepreneurship.
Max, I think you mentioned there very, very important points. Let me recap one of the key points I took out of now. Your input is basically our generation has a huge impact on the future and how young people are actually at the driving force, just like you, on making it into a more greener and sustainable space. And also this challenge you mentioned between countries have to develop. There's still a lot of infrastructure needs to be done, kind of a lot of things, but it has to happen in a green way and kind of rethinking a bit of our economy. That is, those two factors actually can go together and they are not opposite, so that we can make development and trade happen, but in a sustainable way. And then lastly, which I find very important and impactful, and I think we always need to keep very at the core of our actions wherever we are, to include the local community and to make them to think about, okay, what is their needs? So of having all these different farmers included and looking at your interventions, that they have so many multifactorial effects, right? Like reducing floods, reducing CO2 networks, CO2 emissions, all of this. So this is really great to hear. And please, also in the audience, feel free to connect to Max. We put also his business in the chat. And yeah, he has been one of the finalists of the Youth Ecopreneur Awards. So just like last week when we spoke with the two winners, we have a bunch of really inspiring young people who are active in that green sphere of making a difference, but using the businesses to make a difference, right? So thank you for these answers. And I feel like a lot of people can really resonate with this. And I see at the same time, we got quite a lot of responses. Heat waves was now one of the in the middle. I guess potentially these people could come from Europe, which we experienced already like 2 months of heat waves, I think, with 37 degrees today, which is definitely not normal for us here in Switzerland. Also, a lot said floods, high temperatures, water scarcity. That one I can, yeah, wildfires. We have seen so many wildfires again this summer. Irregular rains, and which has all effects on the different systems, right? Agriculture is really dependent on it, but also tourism, you mentioned, is highly affected by this. So thank you all for your inputs and comments. Feel free to also put your questions in the chat, in the Q&A box we have to Max in the coming minutes. He will need to leave soon, so put your questions in now so we can still tackle them. And now I'm coming to the last question for our short interaction, as today will be also about input on insurances and how young people and young businesses can make advantage on it. How is it with your business at this point? Have you actually considered insurances for your business? Have you also considered maybe more specific insurances to get insured against climate shocks and climate change effects? So yeah, looking forward to hear what your thoughts are on this. Over to you.
Okay, so as we are working in the I'd say natural resources environment, it's really difficult, firstly, for insurances companies, to value the nature, how do
All right, I think we lost Max. Let's see if he comes back in. In the meantime, we can answer the question some people of you already answered, but where are you actually joining us from today? So we get a bit of a better feeling of the audience, and then see if Max is able to reconnect. I guess there has been an issue on the internet connection all the way from Madagascar. So Wilson, if you could put on the slide again up from the Mentimeter. So we would like to know from you, where are you joining us from? I've seen already people have inputted, but please continue to input where you're joining us. And I see already people from Geneva, India, Mongolia even. So really nice to see also people from the host country of the Youth Ecopreneur Awards. And I'm seeing people commenting, also UK, Gambia, Somalia, wow, Turkey. I really see that we are a very international and broad group. So that's awesome to see. Let me check if I can reach him on WhatsApp, or if there has been kind of like a power cut in Madagascar and there's nothing we can do at this point. So really see Brazil. Wow, I think actually we reached all continents available. And in the meantime, if you have nothing to do, please also make sure to join our community, yecommunity.com. So you can already Brian has put it already in, perfect, to get a member and be informed about upcoming and future webinars. Oh, he's there. Hi. Are you back?
Yeah, I'm back, but I cannot do the video for now.
Yes, make it happening again.
Yeah.
So, hi, Max.
Okay, so sorry. Yeah, we had the huge internet cut in the country since this morning, so I think they're just fixing it.
No problem.
Okay, so I will get back on the questions about insurances. Okay,
yes,
so I said that, you know, working in the natural resources area is, it's already difficult, you know, to value how do you value the nature, you know? It's a big issue that we often talk at, even at the COPs and with all the UN institutions. It's difficult to value the natural capital. So then how do you work with insurances, you know, to protect yourself and your project? It's a really difficult topic. And mostly in a country such as Madagascar, the availability and costs of insurance is complicated, you know, because the insurance coverage is limited and mostly it's really expensive. So it's not well suited for the unique risk of our reforestation project. There could be, you know, natural catastrophes, as I said, like cyclones or extreme heat that could just hurt all your plots, the floods, the storms. Then you have the tree mortality. Planting a tree is planting an organic matter, you know, so you cannot be sure that 100% of your trees are going to grow. So it's difficult to forecast the survival rate and then to value it. So the only thing we have insured, all our business matters, like I said, like our cars, the local infrastructures, the offices, they're all insured, you know, as a normal business. Our tree nurseries, they're insured because we manage them. They're really well located, bird, so they are insured. But for our plots, which is our biggest investment, for now, we didn't find yet a system to insure these plots, because of course you have also legal and regulatory issues. It's a long-term investment. You have also to consider local and cultural considerations. For instance, the land tenure issues is a big topic for us. And most of the people, most of the farmers, they don't have, the land tenure. They cannot prove like they are the real owner of the land, even if their great grandfathers lived there, their great father lived there, the fathers lived on the land. It's hard for them to prove it because they don't always have papers. They live in really rural areas. They cannot read. So the insurers, they won't be willing to insure this lands. So for us, it's a real important issue.
Thank you, Max, for sharing this. And indeed, insurance is a highly complex topic, and often not a topic you always want to tackle with, because it gets very legal and very complicated. But that's why we also invited today two experts on this to give us a bit of guidance, because I feel like out of personal experience, I feel like it's way easier if someone is guiding you through it, giving you a bit of background, and then you feel like also a bit more motivated to deal with this topic, which can have quite a lot of impacts, as you mentioned, Max, for your own businesses, but also, of course, personally. So thank you so much, Max, for taking the time today to share your story, to share, including this little power cut or internet cut. It all went well. So thank you for really being connected all the way to us from all over the world here. And audience, please share some reactions with the reactions to show congrats to Max and for all his great business he is setting up in Madagascar, and for also making it that far to the finalist stage for the Youth Ecopreneur Awards. I know you need to leave now, so thank you very much for your time.
Thank you for the opportunity, and thank you to everyone who listened. And I still have 10 minutes, so I'm really looking forward to hear what Sophia and Julie have to say, and I will leave after. So thank you, everyone.
All right. Okay. Awesome. Then I think this was now the perfect leeway for Julie and Sophia to dive into the presentation. As I said, this webinar series is in partnership with Sidley, so we always invite experts from Sidley to dive into specific topics, but connected to our theme on green skills for youth, which is this year's International Youth Day theme. So over to you, Julie and Sophia, to let us get introduced to this topic.
Thanks very much, Melina and Max. All very interesting to hear from you. So thanks for sharing. By way of brief introduction, my name is Julie Rodriguez, and I'm a managing associate in Sidley's London Insurance Group. My focus is on transactional and regulatory work for insurers, reinsurers, investors, and other participants in the global insurance industry. So that's a bit about me. Hand over to my colleague, Sophia, to introduce herself.
Hi, everyone. My name is Sophia Wallach. I am an associate in the corporate practice group and work with the environmental group as well at Sidley Austin in Los Angeles. And perhaps this presentation is timely because I'm actually in Southern California right now, and we are experiencing our first hurricane in nearly 100 years. So if my power goes out or my internet is shoddy, I'm also very sorry. Thank you to Melina and to Max for speaking. It was great to hear from both of you, and hopefully our presentation will tie into yours quite nicely.
Thanks, Sophia. We're excited to be here today and to be speaking about climate change and insurance considerations. Climate change is a hot topic at the moment, quite literally. It seems every week we're hearing about devastation caused by climate change. So whether it's wildfires or flooding, the climate catastrophes are causing losses across the world. So during our discussion today, we'll explore how climate change is impacting small and medium-sized businesses, as well as how insurance can help to manage those risks. But before diving into the discussion, we've got a Mentimeter poll for you. So we'd be interested in hearing what insurance means to you. We have risk management, safety, health, minimizing monetary loss, economics, mitigation strategies. I like that one. So all very sensible answers. And we hope by the end of this presentation, you'll definitely know what that means for you and your business. Sophia, over to you for the start of climate change.
All right. So with that, how is the climate changing our world? So climate change poses one of the most pervasive risks, as everyone's been saying here today, to our planet and our prosperity. Its effects are already evident and shaking up our risk landscape. Warmer average temperatures, repeating what my colleague has said, rising sea levels, longer and more frequent heat waves, heavy storms and rainfalls, and more floods and weather extremes. And while this isn't news to anyone attending today, no one here is wondering whether climate change is happening. The climate has been changing as long as the Earth has existed, but now the Earth is going through dramatic changes in our lifetimes. And so the changing climate is changing our worlds too. Next slide. So because the climate is changing more quickly, the impacts are being felt faster and more frequently as well. So this creates risks for businesses and people who have made plans based on a future that is no longer as predictable as it once was. So enter the insurance world. According to Swiss Re, one of the world's oldest and leading providers of reinsurance, insurance, and other forms of insurance-based risk transfer services, losses arising from natural disasters in 2022 caused an estimated $115 billion in insured losses, which is significantly higher than the 10-year average, which was 81 billion from 2012 to 2021, all the way up to 115 last year. So in the world of insurance, increased risk from natural disasters may take three forms. And I'll mostly focus on the first form here. So physical risks. So as a policyholder, so someone who is having their property, having their business insured, a natural catastrophe increases the severity and frequency of climate change risks. And as a policyholder, this leads to increasing numbers of insurance claims for primary physical risks, such as property damage, business interruption, and secondary risks that are more difficult to identify in an interconnected economy. For instance, financial losses attributed to a natural disaster may lead to financial losses for a business that did not suffer direct physical damage. In the agriculture sector, crops and farmland that did not grow due to drought may have ripple effects across restaurant and hospitality businesses as well. There may be political consequences that may stem from the fallout of a natural disaster, and there may be health-related consequences from the increasing heat waves, floods, and droughts. And these are all very tangible. Now for the insurers themselves, the insurance companies, and to preview a little bit of what my colleague Julie is about to get to in a moment, not only policyholders, but insurance companies experience fallout from these physical risks. So for them, increasing severity of natural catastrophes increases the costs of payouts. Increasing frequency causes operational challenges for insurers and brokers to meet increased demand on handling claims. For life or long-term insurers, the health consequences can impact longevity and mortality rates, and potential changes in migration patterns may impact life expectancy as well. Prediction essentially becomes more difficult. For asset insurers, properties that they have insured may lose value due to physical damage or property becoming too expensive to rent or buy, given the additional cost of insurance involved. That's just physical risks. Now for second, the transitional risks. This is not as well understood as physical risks, but as governments and companies try to deal with climate change and the related risks, they may begin changing policies, so the regulatory environment might change. For instance, we see this with the Paris Agreement and the push to transition to a low-carbon economy in many countries. Companies may no longer invest in carbon-intensive industries over future uncertainty, or they may change product offerings to less quote-unquote dirty assets due to regulatory incentives or pressure. For insurers who see these potential risks on the horizon, they may change their product offerings, so the insurance offerings, to incentivize companies to transition to products that the insurers believe are better investments. And finally, liability risks. So this is, climate change has fueled a global rise in climate litigation. And while this category of risk is not as frequently present in market calculations and regulatory discussions so far, if you're a company that's seeking directors and officers insurance, employment insurance, or insurance against public liability, these policies may be exercised more frequently as payouts for damages are made. And so with that, I'm going to hand it back over to my colleague to dive into the details of insurance.
Thanks, Sophia. So we've got another Mentimeter poll for you. And this is on what your fears are of insurance. So I'm really hoping to be able to alleviate some of these by the end of this session. And say for myself, a fear of insurance, I think is the complexity of it that we've already kind of been speaking about. You know, it's especially, I think we're all very familiar with banking, you know, having bank accounts, but insurance is quite a foreign type of financial services product sometimes for some of us. So I don't understand. Yep, I can completely be with you on that point. Until I joined the insurance industry, it was very confusing to myself, too expensive. That's a very fair point as well. And we're going to touch on that during this discussion. So I think we'll dive into it. And, you know, of course, we've got time for questions at the end. So if we could go over one slide once you're finished. Thank you. So what is insurance? Insurance is a contract. So an insurer promises to pay an insured, so that can be you or your business, an amount of money in case an event occurs in the future in exchange for a payment which is known as a premium. And essentially the purpose of insurance is to reduce the exposure to the effects of a particular risk. So this could include damage to or loss of physical assets, such as your premise or your equipment, illness or death of key members of staff, compensation claims against the business interruption caused by external events such as the pandemic, volatility in cash flow pressures, and cybersecurity attacks, just to name a few. But unless there is a mandatory requirement to have a particular type of insurance, it's up to you to decide what type of insurance you want for your business and the amount that you'd like to be covered. Go on to the next slide, please. Thank you. So we've touched on what insurance is. So why might a business choose to get insurance, and what are the drawbacks? So insurance helps to reduce a business's exposure to the effects of risk. So for example, if you were to get flood insurance, it wouldn't stop the flood from happening, but it would reduce the amount of financial impact to you and your business in the event of a flood. So ultimately, it helps to manage uncertainty for risks that could happen. And what about the difficulties? Well, businesses are responsible for paying the premium, which can be expensive. And we've just seen that with our responses. It can certainly be expensive. And there's also uncertainty over the availability of insurance, depending on where you're located. I believe Max just touched on that point as well as how the policy may change over time. So for example, after the COVID-19 pandemic, we saw a number of insurance policies exclude cover for pandemics. Move on to the next slide, please. Thank you. So I've just mentioned unless there's a mandatory requirement, it's ultimately up to you to decide what insurance to get for your business. So the list on the slide sets out examples of types of insurance your business may require. That's not a must, may require. And as you can see, there's a wide variety of insurance for businesses. So anything from agriculture and crop insurance to cyber insurance. So how do you decide? So there are people who can help you understand which insurances may be beneficial, and we'll explore that in more detail later on. So we'll just put a pin in that point for now. Can we go on to the next slide, please? So as Melina said, insurance can be very legalese at points. We don't want to get too technical, but we thought it'd be useful to draw out some of the key material terms in a contract of insurance. So if we start at the top, a policy, this is insurance coverage as agreed between the insurance company and the customer. So you and your business. Coverage, this is what your insurance will and will not protect if you need to make a claim. So in the example with flood, do you actually have flood insurance coverage under your insurance policy? Deductible. This is a specified amount that has to be paid before an insurance company will pay a claim. So you may be responsible for covering losses up to a particular point before your policy will respond. This is also sometimes referred to as an excess, changes depending on region. Conditions. This explains the duties and responsibilities of the customer and the insurance company. It also states the requirements that need to be met for the coverage to be valid. So you may have an obligation to do certain things before your insurance coverage will respond. So as an example, it could be something like a risk assessment for your organization, and that being a requirement, and that also helps the insurer to understand your exposures to certain types of risks. Exclusions, this is a risk or item specifically not covered for a policy. So as I've noted before, after the COVID-19 pandemic, we saw a number of policies exclude cover for pandemic-related losses. So it's really important to understand what is covered and what's not covered by your insurance policy. Limits, this is the highest amount an insurer will pay for a claim that your insurance policy covers. So as we've said with the deductible or the excess, this is the amount that you need to pay before the insurance policy responds. There's also an upper limit to that, which is the maximum amount an insurer will pay for a particular claim. Premium, this is the amount to be paid by a customer for an agreed amount of insurance coverage. So how much you're paying in exchange for this insurance policy. And term, this is a very important one, the total duration of the insurance coverage. So it's important to know that what period of time is covered by your insurance policy, because a loss would need to occur during that period of time. Could we move on to the next slide, please? Thank you. So another key area we wanted to draw out was making a claim. So let's stick with the flood example. If you have flood insurance and your business gets flooded, how do you go about making a claim? So you'll need to check your policy to understand how to notify the insurer, but there are a few key points to bear in mind. The first, are you within the time limit for making a claim? So as we've just explored before, the concept of a term clause within an insurance policy, it's really important to know whether or not the loss that you've suffered has occurred during the time and the term of the insurance policy. Is your loss covered? So the loss that's occurred, are you actually covered for it under your policy? So again, with the example of a flood, do you actually have flood coverage under your insurance policy? How much the excess is, so the deductible. As a reminder, this is the amount of money the insurer would take off the claim. So it may not be worth making a claim if the amount you're claiming for is less than this. The small print, always read the small print if anything, it's our key takeaway for today. Make sure there's nothing in the terms and conditions that prevents you from claiming. So is there something that you were supposed to do before the insurance policy will respond? And you'll need to include copies of paperwork and evidence to back up your claim, including receipts, because as you go through the claims handling process, you may be queried or your claim may be refused if there's a potential, say, disagreement over whether or not it's covered. So it's really important to ensure that you have a file that's backing this up. And now moving on to the next topic, we do have another poll. So who is involved in insurance? We'd like to hear your ideas in terms of the market participants. So let's see, the insurer, excellent. The insured, fantastic, gold star. So we'll move forward and we'll get a bit more of an idea. I can tell you right now, there are a ton of different participants within the insurance industry, but we're going to break down just a few of them today. The middleman, I love that. Insured, customer, businesses, my business, excellent. The victim, enterprises, fantastic. Can we move on to the next slide, please? So this is quite a simple diagram, but I'm a visual learner and we thought it would help to bring to life some of what we're speaking about today. So if we're looking at the left, the policyholder, this is the person who's insured under a contract of insurance. So as we're speaking today about small business owners, that can be you yourself or the business. Brokers, the middleman, as we just saw on the screen. So a broker acts as the agent for the policyholder to arrange insurance. So they help you to be able to obtain insurance. The broker plays an important role because the broker is able to provide advice. So earlier we thought there's so many different types of insurance. How will I know the right type for me? A broker is key in that role because they can actually provide you with advice and help you to select the right coverage and assess really the risks that pose the greatest threat to your business. So there are people that can help you and they're licensed to be able to do the job as well. But you don't need to use a broker. You can also buy insurance directly from some insurance companies, and you often see online platforms that facilitate this. So you can cut out the middleman if you want, if you're confident and you know exactly what you need, and you can go straight to the insurance company. And certainly, not least but last, our insurance company in this diagram. The insurance company is the insurer. It's the company that's promising to pay you in the event that you have a valid claim. And the other key point to bear in mind is that the broker and the insurance company are both regulated. So they'll operate within a regulated environment, which means a third party will look after them in making sure that they're doing the right things and looking after the way in which the business has been conducted. So we can go on to the next slide, please. The regulator. So what is the role of the regulator? The regulator looks after brokers and insurers to make sure that they're doing the right thing and they're registered, which is really important. So do they have the right permissions, the authorizations to be able to do the work they're carrying out? The regulator also sets the framework for these players to operate in. So for example, the regulator may have certain requirements for policies, complaints, and claims. And the regulator also helps to educate consumers, such as yourself, and ensure minimal disruption if there's an issue with an insurer's solvency. So they really play a crucial role within the insurance market. So if we go to the next slide, we have an example of the insurance regulator in Kenya. And you'll see that there's a link on the website where you can find a list of the regulated entities. And this allows you to check to make sure that the insurer or the broker that you're dealing with is registered or authorized. And that's really important because you want to make sure the person is licensed to be able to either underwrite your policy, so to issue this insurance policy, or to provide you advice. You should be able to find similar information available from the regulator in your country. So a good Google search is always helpful with that, and hopefully they'll have a similar type of information. We go to the next slide, please. Thank you. So this is again another example from the Kenyan insurance regulator. And the regulator's website here helps to provide information on how to make a complaint. So you could be making a complaint because you're unhappy, for example, with the claims process or the way you've been treated when you're buying insurance. It differs depending on the region that you're located in, so it's really important to make sure you look at your regulator's website, but most of them should have similar information available to help a consumer. So moving on to our next topic, we have another Mentimeter before we get into it. So we're looking at microinsurance and microloans, and we'd be interested in hearing from you in terms of what's the typical size of a microloan. I love that. Just euro currency. Can be anything. That's an excellent answer. $10,000, $15,000, all very good. $25,000, $2,500, under $10K. Excellent. So these are all really good answers, and I'll provide you with the answer in a moment. So if we can dive into the next slide, which is microinsurance first before getting into microloans. So microinsurance. Microinsurance is offered at a lower cost than typical insurance policies. And these policies are often offered through community-based organizations. And that's really important because through specific community-based institutions, there's an ability to customize insurance products according to particular needs and circumstances of local communities. So as Max said earlier, it's difficult sometimes to be able to quantify the types of risks that you're facing, understand that. So really microinsurance policies help to provide solutions that are really focused on the region that you're living in and typically at a lower cost. So really, as a result of these insurance policies, they're very widespread in developing countries where a large section of the population can benefit from insurance at a micro level. And some of the types of microinsurance include crop microinsurance and natural disaster insurance, so all very relevant in the context of climate change. If we can go on to our next slide, please. Microloans. So microloans are small loans issued to small business owners, such as yourself, and the loans are often up to 50K. So there's your answer. Although all of the other answers that have been provided, typical between 10,000, 20,000, 15,000. So the loans can be used to grow a business or to cover day-to-day expenses, such as an insurance premium. And similar to microinsurance, these loans were originally offered through community-based organizations, but they've grown into the financial sector more widely, so becoming more and more available. So now I'll hand over to my colleague, Sophia, who's going to dive back into climate change.
Thank you very much. So how do climate shocks and climate change affect insurance? And this was a question that was asked earlier, so now we're going to ask it again. If people want to give their feedback on how those climate shocks have affected you directly, what I'm going to do is I'm going to tie a bit of what my colleague Julie has talked about to how climate change is actually going to be impacted by insurance and the insurance sector. Yep, heat, absolutely. Floods, I'm in a flood risk zone right now. Temperature variation, water scarcity, fires, extreme cold. We've all felt these. All right, going on to the next slide. So, big picture. Insurance companies who have long insured against what they refer to as primary perils are now being asked to insure for secondary perils as well. These both fall into the physical risks category that I mentioned earlier. Primary perils are defined as those that have the highest loss potentials, are well monitored and usually covered by catastrophe models. So here we refer to mainly as earthquakes and tropical cyclones. These, as I said, are well modeled, and the insurance market is kind of prepared to meet those needs. Traditionally, the insurance described by my colleagues covers primary perils, but shies away from coverage of secondary perils. So companies are now opening insurance policies for secondary perils much faster actually than those for primary, and the insurance companies are adapting to meet those demands. So what exactly are these secondary perils? It's become a more common term lately, but what it actually means kind of depends on who you ask. If you ask a dozen insurers, you'll get a dozen different answers. They are non-modeled risks or sub-perils, perils for which model availability is patchy, perils perceived to be not well modeled, and anything that kind of the industry has not already accounted for. What I like to use is the term emerging perils. So ones that are kind of developing as climate change is impacting us, and ones that the insurance industry is not prepared as much to face. To be more specific, secondary perils, they typically are those that generate small to mid-sized losses, such as hails or smaller scale floods, storm surges, or bushfires. And just to give an example, so it's often the scale, it's often if it's the first, in a climate disaster, if you have an earthquake, is it the earthquake or is it the tsunami that follows? How exactly does that work? It is how insurance companies have typically looked at this situation. Secondary perils are typically weather related, and so we might expect that climate change will have an influence, an outside influence on secondary peril loss outcomes in the future in particular. So I've just given an example of some photos on the far left. We have soybeans that show the effect of drought in Texas. I think we have in 2013. On the second from the left, it's actually flooding from the monsoon rains in Pakistan in 2022. On the second from the right, we have the effects of flooding in Madagascar after Cyclone Batsirai. So Max spoke about this a little bit earlier, just the amount of flooding and kind of destruction that can happen, which was combined with another storm right at the end of 2022. And then we also have the landslides that destroyed a highway during an earthquake in Japan in 2016. So there's all these different ways that kind of these climate disasters can impact our environment. Next slide. So this is the way the insurance market has developed to address climate change. So weather-based coverage. This is known as parametric or index insurance. So the term parametric insurance describes a type of insurance contract that insures a policyholder against the occurrence of a specific event by paying a set amount based on the magnitude of the event, as opposed to the magnitude of the losses in a traditional indemnity policy. So an example is a policy that pays $100,000 if an earthquake with a magnitude 5.0 or greater occurs. So it's tied to the actual event rather than the amount of the losses. So this is different than what my colleague Julie was talking about earlier. So today, parametric insurance is playing an increasingly significant role in the market for disaster insurance in particular. It's attractive because it eliminates the elimination of the claims adjustment process allows money to reach policyholders much faster. And it's also driving the growth of microinsurance. Traditional indemnity insurance may have otherwise been unprofitable or prohibitively expensive, as you all have said, due to the higher administrative costs associated with the claims and the adjustment process. So index insurance, which is sometimes used interchangeably with parametric insurance, but is slightly different, is relatively new and innovative approach to insurance provision that pays out benefits on the basis of a predetermined index, so rainfall level, for loss of assets and investments, so primarily working capital resulting from weather and catastrophic events. And because index insurance doesn't necessarily require the traditional services of insurance claim assessors, it allows the claim settlement process to be quicker and more objective. We wanted to give one example of a platform that is really utilizing the index insurance model, and that is Acre Africa in Kenya. So Acre Africa offers farmers tailored crop insurance plans to help mitigate crop failure due to adverse weather patterns across Kenya, but not just Kenya, so Rwanda and Tanzania. And there are additional project operations in Uganda, Ghana, Malawi, Senegal, and Mozambique. So they accomplish this through the use of a micro insurance product known as Bima Pima, which is the credit card that you see and loosely translates to insurance in affordable bits. So what it does, what Acre Africa does is that it's not an insurance company, but a service provider working with local insurers and other stakeholders along the insurance value chain. So to keep costs low for farmers, Acre Africa's inclusive business model utilizes established distribution channels such as financial institutions, agri-dealers, and mobile operators. And the company's typical customer is a farmer residing in a rural area that cultivates under 2 acres of land and that caters for 3/4 of the household's income of an average of 7 or 8 people. So it's a very specific kind of market that's targeting, and that's one that hasn't typically been the focus of larger insurance companies. So to give a little bit more context, because I think it's helpful to imagine it, the insurance products are index-based. So the payouts are determined by comparisons to historical, regional, and rainfall patterns. For instance, so where a classical indemnity-based insurance is based on crop damage reports after the harvest, so it's delayed, it's kind of resource intensive, requires a long claims process. In this situation, there are premium payments that customers make, on an ongoing basis, and then payouts are made electronically through farmers' mobile networks and mobile phones. So there's no need for this in-person claims inspection, which can be very costly in remote areas. A lot of it is done based on weather data. There's constant monitoring. It can kind of be, as it goes, interaction between the event as it occurs and then the actual payout. So for instance, during the planting season, actual rainfall is measured using a solar-powered weather stations located typically close to farmers. And then if the rainfall is determined to be too little or too much, a payout would be sent automatically using mobile money. And then the amount would be based on the deviation from the rainfall index. And so we can provide more information on this one kind of version of index insurance in particular, but it's a great model for how insurance can meet the different challenges that companies and businesses are facing. And just for your aware, that also uses geolocation software. So it's one of the ways that the actual products, for instance, corn or whatever it is, whatever they have been tagged, whatever you have bought to be insured, that will be geolocated, so they'll actually know how that product is doing in correspondence with the amount of rainfall. So it's really great use of technology as well. Next slide, please. Okay, so we're back at the question, the age-old question: insurance, not insurance, should I get it, should I not get it? I think that if insurance is new to your business, it's important to think about what might be the incentives and disincentives, or how climate change impacts those calculations. And with the proliferation and invention of index insurance, is that something that becomes more appealing as it becomes more affordable, as it becomes more accessible, and as the realities that you might need it become more frequent. So starting from disincentives, disincentives might be getting insurance might disincentive companies from adopting new innovative measures, right? Because you might have an insurance policy and you want to keep operating in a way that is covered by the insurance policy. Additional ongoing costs and difficulty in navigating the insurance claim process, retention due to frequent delays in payout processing, especially in more traditional models, And one thing that I took from Max's presentation earlier was so actually measuring, for instance, reforestation programs, trees, right, are organic matter. So you can't really predict as much how it'll go, but perhaps the idea is that with something like index insurance, you will be able to measure in a slightly different way. And that's kind of developing to meet each specific need. And feel free, if you want to pop in the chat any more disincentives, because it's a balancing game, right? So then other incentives to getting insurance, now that we know. It reduces the cost through spreading the losses among different parties and across time. So for instance, for Acre Africa, the source of the funding that they have comes from a multitude of different places. There's a risk pool that allows them to have capital available to actually pay out much faster than you might otherwise. Things like that provide the fact, make insurance more appealing perhaps than it used to be. And it enables timely recovery. So rather than having to wait until the next season, next year, a lot of recovery can happen more quickly. Any others? Feel free to pop in chat. I know that we've talked a lot about these already, but I think we've provided a little bit more context as to what the benefits and disincentives can be. Okay, next slide. Okay, so we have covered a lot of different topics. So we've kind of delved into the details of insurance, which I think can take it takes a lot of time to understand, but it's useful. And I hope that we have kind of synthesized it a bit for you. What we've provided here is a list of kind of larger international organizations by region that have index insurance specifically programs that, they provide funding, or they are a good resource to find other organizations that provide this insurance. So it's a good place to start. Websites are useful places to start, and they're often these partnership networks so that you can find something that works specifically for your needs. All right, next slide. And there are other insurance related resources as well. We've listed some here that kind of combine some of the topics that both of us have discussed. But also if you have questions for us and anything that we aren't able to answer, we can always provide additional resources and kind of go back and make sure that we've understood it correctly and can provide you with more information. And so with that, do you have any questions? We open it up.
I think we have a few in the chat if I've
yes,
spotted them correctly.
Exactly. We have a few in the Q&A function, and also I think a few in the chat. So thank you, first of all, Julie and Sophia, for this great presentation. And I must say, even though I personally I'm not a huge fan of insurances because of all the reasons we mentioned, it was really entertaining and also good to learn more about it, like digestible. So let's kick into the first questions we received. And just as a heads up, I received that questions now a couple of times. We will share the presentation, the slides, and also the recording with all of you. So you will be able to tap into the resources Julie and Sophia mentioned, and you can do some more research. But some people asked, kindly, I'm not sure if you're able, but let's see. Kindly propose business insurance service providers in South Africa that have SME-friendly rates. So do you have any recommendations where this person can go to get some more information?
If we can follow up with this, that'd be helpful, because off the top of my head, no, but there will be insurance providers that focus on more SME style insurance, so we can follow up with that.
Awesome. Okay, so maybe you can pop in your email later in the chat, and then Karen, if you want to reach out to them with your question, that will be helpful. Then we have another question. When someone orders products from a particular platform, but later you discover that what you ordered is not the right thing they delivered to you, what measures you need to put in place to claim a change of order?
Okay, so this is definitely an answer that's country specific. So depending on where you're located, what obligations the insured has to the policyholder, that changes. So in the UK, we have specific requirements around this. The thing that I can say, and important to bear in mind, we discussed obtaining insurance directly from an insurance provider and then also through a broker. If you've dealt with a broker and you've requested advice and the advice is not correct product, that's a completely separate issue than buying a product that you don't think is suitable for yourself. So if you've been instructed to buy a particular product and it's not suitable, then having discussions with your broker over the suitability is something that you should do directly with the broker. If you purchased your insurance directly from an insurance platform, again, it's going to be country specific. But what I will say is that once you've bought a particular type of insurance, you're signing up to the terms and conditions that are there. So that's why it's very important to understand what exactly you do need to be covered for. So if you've not obtained any advice during the time and you go on and you purchase the insurance, you're then confirming that this is the right type of insurance for you, which I think probably increases some of the fears that we have on there. So there is abilities within insurance contracts to be able to make variations and change cover, but that's specific in terms of what you've agreed with your insurer. So again, you've really got to be close about reading the kind of terms and conditions. I appreciate that's not a clear-cut answer, but it's going to change depending on the region, depending on the type of insurance product that you've purchased, and ultimately who's been involved in the process. So just keep those all in mind as you go through, and make sure you read your insurance product before signing up for it.
Yeah, I think that's always a valuable advice, to read everything, even though it's quite a lot usually. But Julie, maybe a follow-up question on that. Do you think these type of claims can actually be done by a non-lawyer person, non-legal expert? So in the sense of like, in my contract A, B, C, and you just write an email, or what's kind of like your experience on that?
So in terms of changing the product afterwards, or being able to purchase insurance more generally, just to clarify?
No, like based on your opinions, when you tap into difficulties with an insurance company, are they usually reactive on personal kind of like claims?
Yeah, so, and this is, again, it depends on where you're located. In the UK, you know, I think the insurance industry is very good. They've progressed a lot, and there's specific requirements in terms of how quickly you need to respond to a claim, or for instance, if you make a complaint, how quickly you need to go back to the policyholder. So especially in Europe, in the US, they've been built out quite a lot. It depends on where you're located, but there should be obligations placed on the insurer to come back during specific periods of time, and that will be specified within your policy. So if you're looking at making a claim and they'll say within X amount of days you'll hear back, make sure that that's being followed. And if not, document that, because that's the basis of a complaint that's there if they're not kind of following the service levels that have been set out for yourself. But fortunately, again, it's very much driven on where you're located, the regulatory environments that's there, the obligations placed on the insured.
Okay, thanks for this. There was another question in the chat or in the Q&A function asking, what are the measures the insurance company actually put in place to reduce the climate catastrophe in the world? Do you think, are they actually also an active player to reduce this, or do they rather see it as an extreme, as a money-making opportunity now?
So it's really interesting one, and that actually ties in a lot to the work that I do around ESG. So as a concept, environmental, social governance, but the E ties quite closely into climate change. And as Sophia mentioned earlier in the presentation, insurers will have to deal with their own exposure to climate. So for instance, if they have a particular book of business, they're writing certain types of insurance. If there's a high exposure to climate related losses, they'll need to make sure that they're managing that, because they don't all of a sudden want to insure, say, a ton of houses that are all based in Florida during hurricane season, and there's a massive loss that then they're responsible for. So they do a lot of risk mitigation themselves in terms of their own exposure to climate related losses. And alongside this, I'll say in terms of the investment, so insurers reinvest their own profits to generate more income, and there'll be obligations placed on insurers, especially nowadays in terms of ESG related compliance, in terms of what you're choosing to invest your money into. So more and more, we're seeing a big focus of this in the insurance sector, and especially for listed companies, so those that are on the stock exchange, there's a lot more requirements in terms of being able to evidence their push towards this. So you'll see more and more of this. But yes, to answer your question, it's, at least from my experience, have been a hot topic as well for insurers, and wanting to be doing the right thing as much as making sure that they're making a profit.
Yeah, and just to add on to that, so the carrot or the stick metaphor, if an insurer is only going to insure certain kinds of housing, for instance, or certain kinds of businesses, that in and of itself influences a business's choice, because they know that they will or will not be able to get an insurance policy based on where they are operating or what kinds of business products they themselves are engaged in. So even if an insurance company decides to, say, pull out of Florida, that impacts what's happening in Florida, whether or not houses that would be more susceptible to a hurricane would be built in Florida. So in an indirect way as well, I think the decisions that insurance companies make have an impact.
Yeah, definitely. And they'll choose sometimes, you see it in the UK a lot with like subsidence issues, they'll choose just not to insure certain property based on the amount of claims that they've had in the past or their exposure. So it's difficult because you need solutions as much as you need the insurance available. But yeah, it's a balancing act.
Totally, because you can have two influences, right? Of like choosing maybe the right action to do, but then you don't find potentially insurances because it might be in a risky area or very highly affected from climate change effects. So yeah, sometimes insurances don't actually want to cover you anymore because you experience the same thing over and over, and then they're like, kick you out, right? So sometimes it's both of this, but it's really great to hear that they actually do have also quite a lot of incentive to improve and to push towards climate-friendly actions and sustainability procedures. Let's move on to the next questions we have here. How extreme do actually natural events have to be covered by insurance? For example, changes in temperature are not extreme like a hurricane or wildfire, but has serious effects on agriculture and the crops. What would you say on that?
I'm going to give you a very legal answer. It depends. And it always comes down to what actually the insurance policy says. So for instance, if, as Sophia was mentioning before, where you have certain like index link things where it's looking for you to quantify a certain amount, say of rainfall, but some insurance policies are related to, damage to your property. So it depends on, you can still have a loss from something that's not a very extreme event, but there is still damage. So it depends on the type of coverage that you have and the loss that's covered underneath the insurance policy.
Yeah, and then so in the example of rainfall itself, if you have a below average level of rainfall, for instance, that would lead to drought, which would then affect, the ability of crops to grow, that would be measured. So the below averageness of the rainfall would be the determiner of whether or not the payout would occur. The exact amount and whether or not it would be below average enough is, dependent on the insurance policy. But that's the idea behind index insurance and what makes it different. So it's not the damage, it's the change in the actual amount of rainfall. I think global temperature would probably be harder to be the metric. So there are these other things that have developed in its place.
Maybe a follow-up on that. Do you think now, moving forward, more and more kind of like these climate shocks will be included as a standard in normal insurances? Or is that always kind of moving forward still an extra insurance or like a top up you will need to put in?
Yeah, probably a combination of both. I mean, it's difficult because the whole basis of insurance is that there's uncertainty. And as soon as it becomes certain that a loss is going to happen, it's no longer insurable. So I think to me, the question is, as we get to a point where these losses keep happening and it's very certain they're going to happen, how that's going to play out in an insurance context. I think it's going to be difficult, but I think more and more you're seeing insurers, especially wanting to, separate themselves from competition, looking at innovation and offering products that are suitable and that can help the policyholder. And especially in the UK, we have a big drive for, treating customers fairly, looking after their needs and providing solutions to areas, especially that are prone to particular types of risks, is something that is going to become increasingly important in the context of climate risk.
Thank you for this. And I think we came to the end of the questions I see in the Q&A. So maybe I can ask one personal question, which I came up in my mind following your presentation. I still have a little bit of troubles understanding the difference between microinsurance and then kind of like a normal insurance. Like, to what extent, is it micro because it's only me, it's like a personal one, and that's why it's called micro, or is it only also about kind of like the amount which is covered by the contract? So if you could clarify again a bit this concept.
Yeah,
Thanks.
so microinsurance, I think the focus is more on the types of risks that are being covered, and as well the quantity that's behind that. So normally with insurance products, you'll get them approved that they're not tailored very much. So you can get insurance focused solutions that, it's a kind of a menu and you're pulling down different, types of packages. But for microinsurance, it's very tailored to a particular type of region, particular types of losses, and the focus is on affordability. Whereas general insurance that you might go on and buy, it's very generic. I need motor insurance. I'm going to go on, and yes, maybe you can look at the limits that might be there and such, but it's not really focusing on risks. That the focus for microinsurance is very much on the risks facing a region, and again, the affordability that's there, rather than just kind of a generic insurance related product.
Perfect. No, thank you for the clarification. And yeah, insurance, I think, is a very hot topic and very complicated one, as we have heard. So I think we came to the end of your presentation, right? Did you wanted to say something again on your Sidley representation, or all good?
I think all good from our end, but just, from myself, and I'm sure Sophia as well, thank you very much for giving us the opportunity to speak with you. And I think insurance, can be very scary. And for myself, I started in asset management banking space and moved into insurance, and it was equally as scary for me shifting into a different space. So I just say, try and do your homework, do your research, think about what risks are actually facing you, and know that there are people and resources available to help you to navigate through a challenging sector, and hopefully become more user-friendly over time for all of us.
Perfect. Thank you. Now then, let me use this opportunity. Oh, Sophia, sorry, over to you.
Oh, I just wanted to say thank you as well. Thank you to Julie and to Milena and to Max and to the community for having us here. We really appreciate it. And I'm happy to say a little bit about the pro bono program at Sidley, or if someone else is on for that. But our program, our pro bono program, which means that we provide legal services free of charge, was launched in 2012, and we call it the Emerging Enterprises Pro Bono Program, and it provides support to small and medium-sized for-profit enterprises and market-focused non-governmental organizations and nonprofits that have a clear social impact in developing countries, so all across the world. So this is a program that we've been working on and been developing for years, and so we are very grateful to be here and for having us.
Yeah, perfect. Thank you, Sophia, also for this. Just as to an add, I put the link to the website again in the chat, and so feel free to look out what opportunities they have. We at ITC, we like to, we partner with Sidley on several occasions, just like this webinar, but also like with the Youth Entrepreneur Awards. One of the winning packages was actually to get free bono legal advice from Sidley. So really, yeah, it's quite a lot of guidance and efforts you can get in there. So feel free to really check out our opportunities for upcoming options like this. And this guides me also to the end of our webinar